Yes, people, a very happy to all of you. So, guys, we're doing this chapter called as cash flow statement. In the last class, guys, we have completed a discussion on cash flow from operating activity under indirect method. Today, we'll be heading forward to learn how to prepare the cash flow statement under investing activities, not direct investing. Now, guys, preparing the cash flow statement for investing activity is not a big deal. You know what is investing activity, what transactions qualify for investing activity, inflow outflow, so you know, so you'll make it. It's no big deal. The problem comes in certain places where the adjustments are quite tricky, especially when they ask you to prepare the asset account, depreciation account, provision for depreciation account, asset disposal account, investment account. So that is a challenging part in the investing activity. If that is taken care of, investing activity is nothing. So before I do question 37, a small question from my end. KVA Limited purchased a machine for rupees 1 lakh on 1/4/23. Any problem so far? Okay. Depreciation at the rate of 10% on cost 23, 24, 24, 25. No? Okay. 110, 24 on 110, 24. The asset was sold I'll put this as a case, two different case. Case 1, on 110/24, the asset was sold for 70,000 rupees, for rupees 70,000. This is case 1. Case 2, on 110/24, the asset was sold for rupees 95,000. Is the question clear or not clear? Guys, is the question clear or not clear? Wonderful. Now you're supposed to prepare the depreciation. Sorry, not depreciation ledger. You're supposed to prepare the machine ledger. Okay. Now, what is the method of accounting depreciation? There are two ways in which you can account depreciation. One is normal method. Second is provision for depreciation method. Normal method is called as net method. Provision for depreciation method is called as gross method. Net method means what? Net of depreciation. PFD is gross method. So now I'm focusing only on the net method. That is normal method of accounting for depreciation. Any problem in this? Okay. Now, all of you please make a note of this question. Fast. KVA Limited purchased a machine for rupees 1 lakh on 1/4/23. Depreciation at the rate of 10% on cost. Means what method is it? The normal method is SLM method. Depreciation 10% on cost means what? Percentage of original method. On cost is SLM method. Fixed percentage on original cost means SLM method. Straight line method. Done? Now, open the ledger, please. Machinery, ledger. machinery account. This is debit side. This is credit side. Please tell me what is the journal entry for purchasing the asset machine? Machine account debit to bank. So in machine account to bank. On which date? 1/4/23. So 1/4/23 to bank 1 lakh rupees. In that year, did you buy any other asset? In that year, 23-24, did you sell any asset? No. So we have used that entire machine for the entire year. So depreciation will be for entire 12 months, entire year. What is the journal entry for depreciation? Depreciation to machinery. So in machinery account, by depreciation. So 31/3/24 by depreciation will be 1 lakh into 10%, which is 10,000. Now, what is the closing balance? 31/3/24 by balance carried down is 90,000. Please tell me, this 90,000 is at return on value or is it at cost? It is at return down value. So whenever your closing balance or the opening balance means the balance of the next year, 1/4/24 to balance brought down 90,000. Whenever your opening balance and the closing balance is at WDV, in that case, what method of accounting depreciation have you followed? We have followed normal method. Normal method is called as net method. Normal method, net method, both are same. What does it mean? Sir, it means that we have recorded the depreciation in the machinery ledger. We have recorded the depreciation in the machinery ledger. So the value of the machine that has been reflecting in the ledger is after minusing depreciation. This is called as net method, which means from the original cost, we minus depreciation, we get the net value WDV. From this WDV, we further minus depreciation, we get another WDV. So whatever the value that we get year after year, it is the net value, not the gross value. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Yes, sir.
Now what happens? In the current year, you've sold asset. You've sold the asset. When did you sell the asset? We have sold after using for 6 months. We've used the asset for 6 months and then we have sold it. Now, when I'm selling the asset, I'm supposed to calculate the profit and loss. Now, what is the original cost of the asset? 1 lakh. What is the accumulated depreciation? Accumulated depreciation we have to calculate. Now, wait. Let's calculate the depreciation from 1/4/24 to date of sale. From the beginning of the next year to the end of the, from the beginning of the second year to the date of sale. We are standing on 1/4/24. When is the asset sold? Asset is sold on 1/10/24. After how many months? 6 months. To the extent I've used the asset, can I say I have to calculate the depreciation for how many months? 6 months. So now on 1/10/24 by depreciation is how much? How much? 90,000 to 10% or 1 lakh to 10%? 1 lakh to 10%, because the question says that depreciation is 10% on cost. Means what? Straight line method. In straight line method, always you multiply the rate percentage on the original cost. So 1 lakh into 10% into 6/12. 1 lakh into 10% into 6/12, which is 5,000. Do you agree with me? So now 5,000 rupees is the depreciation for the current year. And 10,000 rupees is the depreciation for the previous year. Both put together is how much? 15,000. If I call this as accumulated depreciation, do you have any problem? If I say accumulated depreciation 15,000 rupees, do you have any problem? Now, why I'm using this word is because in some question they will tell you. Which question? In the net method itself, they will use the word accumulated depreciation. Just because they're using the word accumulated depreciation, this does not become accumulated depreciation method. Accumulated depreciation means what? They are telling that the depreciation from the beginning of the year, not from the beginning of the year, from the date of purchase of the asset till the asset is sold, all put together is so and so, which is accumulated depreciation. So accumulated depreciation means what? Total depreciation right from buying the asset till the date is sold. Till the asset is sold on a particular date, everything put together it is 15,000. Just because they're using the word accumulated depreciation here, it doesn't mean that the depreciation is accounted under accumulated depreciation method or provision for depreciation method. Am I loud and clear? Now, what is the written down value of the asset? 85,000 rupees is the balance cost of the asset. Now, what do you understand by this? Sir, we have purchased the asset for 1 lakh rupees. We have used the asset so far for 15,000 rupees. So out of 1 lakh worth of asset, you have used the asset for 15,000 rupees. So what is the unused value of the asset? 85,000 rupees is the unused value of the asset, which is the remaining cost of the asset. Remaining cost of the asset. If I call this as remaining cost of the asset, do you have any problem? This 85,000 worth of asset, you have sold it for 70,000 rupees only. 85,000 worth of asset you sold only for 70,000 rupees. So did you sell at profit or loss? Loss. You sold at a loss of 15,000. So minus sale value, if I do 70,000, I'm getting a loss of 15,000 rupees. Any problem? Am I loud and clear? Now, listen to me very carefully. Whenever any asset is sold, how many monkeys come into picture? Three monkeys come into picture. Monkey one means what? It's a depreciation. So monkey one, we call this as monkey one entry. This is our habit since 11th standard. We call this as monkey one entry. Now, what is the monkey one entry? Always depreciation. Now, please tell me which depreciation am I talking about? Am I talking about in monkey one the depreciation of the asset that is sold, or am I talking about the depreciation of the asset still being used in the business? Whenever I refer to monkey one, I am talking about the depreciation of only that asset which is sold. So here the asset is sold, has been used for 6 months in the current year. So what is the journal entry for that? Depreciation account debit to machine account. How much? 5,000. Now, what is the value of the asset in your books now? It is 90,000. I have to make this zero because at the end of this date of sale, there is no asset existing in the book. This asset value, physically it is not there, means the value should also be zero. So now I will think of how to make this 90,000 zero. So to make this 90,000 zero, I'm taking the help of three monkey. So monkey one is depreciation. The moment I write 5,000 here, depreciation to machine, in machine account by depreciation. What is the remaining value of the asset? 85,000 rupees is the remaining value of the asset. Are you able to visualize that? Yes. Now, you have to pass monkey to entry. Monkey to entry is always entry for profit and loss. Here we have a loss. Now, what is the journal entry for loss? Loss account debit. Debit all expense and losses. Loss is nominal account. Debit all expense and losses. And two, machine account. How much? 15,000. 15,000. Sir, why are we supposed to pass this entry? Please understand. The person who is buying the asset from me is buying this asset for 70,000 rupees. So in his viewpoint, the value of the asset is 70. Before the loss entry, the asset in your book is worth how much? 85. So you are valuing 85 and the opposite person is valuing 70. Always the machine value should be equal to the value that the opposite person is valuing. So opposite person is valuing how much? 70,000. How much you are standing at? 85,000. So I have to bring down the machine value by 15,000 so that both the level will be same. Why this is important? Because when I pass the third entry, what is the third entry? When I collect the money from the opposite person, 70,000 rupees I'll collect. So 70,000 comes in. And what goes out? 70,000 worth of asset goes out. So in the third entry, the value of the asset and the money that is coming both should be equal. To make that equal, the adjustment is done through the above top entries. Monkey 1 and monkey 2 entry will help you to modulate the value of the assets up and down so that after these two entry, the value of the asset in the book and the money that you receive both is going to be always same. Am I loud and clear with this approach? Yes. Now, loss always has the tendency of decreasing the value of the asset. Means what? To this extent, you're not receiving the money. So which means I'm downgrading the value of the asset by 15,000 rupees. So in the machinery account, by loss 15,000 rupees. We call this as monkey 2. So again on 110.24, by loss on sale of asset is 15,000. But please tell me, what is the value of the asset in your book now? 70,000. Now how much worth of asset is going out? 70,000 worth of asset is going out. And how much money is coming in? 70,000 worth of asset is coming in. So always your monkey 3 entry will be the sale entry. Monkey 3 entry will be the sale entry. What is the sale entry? Bank account debit to machinery account. How much? 70,000 and 70,000. So in the machinery account, by bank. 110.24 by bank 70,000 rupees. Any problem in this? So this is called as monkey 1. This is monkey 2. And this is monkey 3. The purpose of these three monkeys is to make the value of this asset which is sold, the asset which I'm going to sell, that I have to make it zero. My intention is not to make the opening balance zero. In this question, luckily the opening balance is comprising of only one asset. In real life, what happens? The opening balance will comprise of multiple assets. So am I trying to make all the asset value zero? No. I'm only trying to make only that asset value zero, which is being sold during the year. Okay. Now imagine in the opening balance, if there is any other machine also still being used in the business, what will happen? For that, the depreciation separately will come by depreciation. Separately it will come. So by depreciation, separately it will come. That is for the asset which is still being used in the business. Then I'll get the closing balance of that machine which is still being used in the business. Am I loud and clear? Any problem in understanding this part? Online people, any problem in understanding this part?
Sir, can you make a combined entry also, sir?
You can make a combined entry, no problem. If you are comfortable, definitely you can make a combined entry. All the three entry put together, you can also combine it. Nothing wrong.
Okay, sir.
But we are doing it separately because separately at times makes our job easier. But yes, combining also you can do it. No problem. To save time, you can definitely do it combining also. Any problem?
Okay.
No problem. Now, have you all finished in this? Yes. Okay. Please take a next page and write case 2. This was a solution for case 1. Please take a fresh page, write case 2. In that, copy paste till this. Till this, you copy paste. I will not copy paste because I have option 2. Whether it is case 1 or case 2, the first year 23-24, there's no going to be change. There's no change in the 23-24 transactions. So two bank, same 1 lakh, by depreciation, same 10,000, and by balance carry down, same 90,000. And two balance brought down, same 90,000. Done? Which depreciation of the other assets? That will be always end of the year, no? Sale, monkey 1, 2, 3. All the 3 entries on the date of sale. Yes. No, on the date of everything happens on date of sale. If you want to write 1 day before the date of sale, also you can write nothing wrong in it, but technically we record everything on the date of sale. So monkey 1, monkey 2, monkey 3. All the 3 entry happens on the date of sale. Original cost of the asset 1 lakh. I want to know accumulated depreciation. So can I say same thing? 10,000 is depreciation for first year and 5,000 for second year. So accumulated depreciation 85,000 rupees. 15,000. Sorry, 15,000 rupees. So what is my WDV? 85,000 is WDV. 85,000 is WDV. Now in case 2, you have sold this asset for 95,000 rupees. You have sold this asset for 90,000 rupees. Sorry, 95,000 rupees. So sale value 95,000. Please tell me you have sold this asset for a profit of 10,000 rupees. Profit of 10,000 rupees. Any problem? No, sir. Now, first entry is what? Depreciation to machine. Because depreciation has always got the impact of reducing the value of the asset. Loss has got the impact of reducing the value of the asset. So depreciation and loss always debit. So depreciation account debit to machinery 5,000, 5,000. This is my monkey 1 entry. Any problem? Please write it down. Now post this in the ledger. So on 1/10/24. On 1/10/24, please tell me what is the depreciation? By depreciation 5,000. Now what is the value of the asset as per your book after this entry? 85,000 rupees in your book value it is. Now I told you after monkey 1 and monkey 2 entry, the value of the asset in your book and the person who is valuing this asset, who is buying this asset, both of them should have the same value. Now what is the value of the asset in your book? 85,000. What is the value of the asset in the viewpoint of the person who's buying the asset? 95,000. And now, will you increase from 85 to 95 or 95 to 85? So I always have to adjust the value of the asset in the book as per the value of the buyer. So now buyer is saying 95. Now my asset in my book is 85. So I want to increase the value of the asset by 10,000. So profit will always increase the value of the asset. Profit will always have the tendency to increase the value of the asset. Because the opposite person says, donkey fellow, the value of asset is not 85. It is 95. It is in that good condition. Though you have used this for 1.5 years, but you have used it very nicely. The value of the asset according to me is 95,000. You have over depreciated. 10,000 rupees extra you depreciated. So I'm going to reverse the depreciation now. So if I reverse the depreciation, the value of the asset will increase, no? So that reversal is happening through profit account. That's why profit has got the tendency of increasing the value of the asset. So machinery is asset account. To increase the value of the asset, debit. So machinery account, debit. And profit is what? Gain. Credit all income and gain. So machinery account, debit to profit. So in machinery account, to profit, not by profit, to profit. So monkey, to entry. Monkey, to entry. Machinery account, debit. Machinery account, debit to profit on sale of asset or gain on sale of asset, whatever you can take it. How much it is? 10,000, 10,000. Please post this in the ledger. 110. 110.24. To profit, how much? 10,000. Now please tell me after this entry, what is the value of the asset in my book? So 90 plus 10 is 1 lakh. 1 lakh minus 5,000 is 95,000. Now the value of the asset in your book is 95,000, and the person who is going to pay this money also 95,000. Both the values are same. Now we can pass the sale entry. Yes. So 95,000 worth of money is coming inside, or 95,000 money is coming inside, and 95,000 worth of asset is going outside. Credit what? Goes out. So buy bank 95,000. This is monkey 3 entry. Monkey 3 entry. Buy bank 95,000. Buy bank 95,000. The value of the asset, as long as this asset sold is concerned, is become now 0. If there is any other asset which is still being used in the business, then by depreciation will continue, by balance carried on will continue. Here that is not the case. Understood? This was the warm up for what method? Net method or normal method for accounting for depreciation. Normal method for accounting for depreciation. Now based on that, can we do one question from your T.S. Grewal book? It is illustration 37, page number 5.44. This says that Global Limited has machinery written down value of which on 1st April 21 was 8,60,000 and on 31st March 22 was 9,50,000. Depreciation for the year was 40,000. In the beginning of the year, an item of machinery was sold for 25,000, which had a written down value of 20,000. Calculate the cash flow from investing activities. Welcome to CA Inter. No? So like, sir, we already came long back, sir. Now, Global Limited has a machinery whose written down value on 1 April 21 was 8,60,000. And on 31st March 22 was 950. Means opening balance of the asset is how much? 8,60,000 is the opening value of the asset, and closing value of the asset is 9,50,000 rupees. Okay, opening closing balance given. Yes, sir. Depreciation for the year was 40,000 given. In the beginning of the year itself, machinery is sold. Please tell me, if the asset is sold in the beginning of the year itself, will your monkey one entry come? Monkey one entry means what? The depreciation for the asset. Monkey one means this is the depreciation for the asset from the beginning of the financial year up to the date of sale of the asset. Here, in the beginning of the financial year itself, I have sold the asset, which means I'm not using the asset at all. So in that case, I will not have monkey one entry. So in case of this scenario, monkey one entry is not there. In the beginning of the year, the item of the machinery was sold for 25,000. So 25,000 means, can I say it is sale value? Yes. 25,000 is sale value. Okay. Which had a written down value of 20,000. Means in this 860, there is one. So this 8,60,000 rupees is the written down value of the multiple asset. In that, there is one asset whose worth is 20,000 that is sold for 25,000. What is the original cost? We don't know. So if I come back to our calculation, the original cost of the asset, have they given to you? Have they given the original cost of the asset? No, it is not given. And accumulated depreciation also not given. But the WDV value 20,000 is given. So either they'll give you this information directly, or they will tell you, even in net method, they'll tell you this particular asset which is sold, no, is bought for 1 lakh rupees, whose accumulated depreciation is 15,000 rupees, is sold for so and so rupees, they'll tell you. So this 20,000 rupees, they can tell you in two ways. One, they'll tell the WDV of the asset is 20,000, or they will tell you the original cost of the asset was 25,000. Accumulated depreciation on that was 5,000. So this 20,000 they'll not directly give you. You have to calculate. Now the problem with the student is that when they use the word accumulated depreciation, people tend to think that this is accumulated depreciation method. This is not accumulated depreciation method. I'm telling you the way they will play with the language. You have to be very clear. When does the accumulated depreciation comes? When you see a provision for depreciation account, when you see a separate account called as provision for depreciation or accumulated depreciation account, which has got a balance, then it means that they have followed the PFD method. Just because they're using the word accumulated depreciation somewhere in the notes, it doesn't mean that they are using provision for depreciation method. This is one way of telling that 25,000 rupees is the cost of the asset. We have so far used the asset for 5,000 rupees. So what is the WDV? They are asking you to calculate how much it is, 20. In this question, what happened? They calculated by themselves and gave you the WDV value. So I'm telling you, this information of 20,000 can come in two ways. One, like in this question, how they give directly the WDV of the asset, they can give. Or else how they can confuse you. They will tell you, this asset which is sold, no, was originally bought for 25,000, on which the accumulated depreciation was 5,000. They will tell this and leave. So which means you have to calculate the WDV. Am I loud and clear? Am I loud and clear? Yes, okay. Sir. Now, this 20,000 worth of the asset means what? Remaining cost of the asset. This is the remaining cost of the asset. You have sold this for how much value? 20,000, 25,000 rupees. So you have sold at a profit of 5,000 rupees. Any problem? You have sold this at a profit of 5,000 rupees. Is the data clear or not clear? Yes, sir. Now what are you supposed to open? Machine record. Please open the machine record. Please open the machine record. One 421. Two balance brought on how much people? Two balance brought on is how much? 8,60,000. Okay. And on 31,322, by balance carried on is how much? 9,50,000. Wonderful. Depreciation for the year means, apart from this 8,60,000 worth of asset, that is in this 8,60,000 worth of the asset, see 20,000 worth of the asset is sold for 25. But remaining asset which is worth 840, that they've used, no boss. On that 8,40,000 worth of the asset that you've used, the depreciation for that is how much? 40,000. So what is entry for that? On 31,322 by depreciation 40,000 rupees. This is not monkey one. Monkey one is depreciation for the asset that is sold. This is not that one. This is the depreciation on the remaining machine. So this is not the monkey one depreciation. Now coming to monkey 2 and monkey 3. Now please tell me people, monkey 1 entry is not there. Monkey 1 entry is not there. Leave it. What is the value of the asset in your books of account so far? What is the value of the asset in your book so far? 20,000. The person who is going to pay you the money, how much money is going to pay? 25,000. So in opposite person viewpoint, it is 25,000. In your viewpoint, 20,000. So what am I supposed to do? Increase the value of the asset in my book. What is entry for that? Machinery to profit. How much? 5,000. 5,000. So in machine record, it will be to profit. On which date? On which date? 1/4/21, because that is the date of sale. So to profit on sale of asset or to gain on sale of asset is how much? 5,000. Now the value of the asset in your book and the person who is going to pay the money is both same. Now what is my sale entry? Monkey 3 entry. Bank to machinery. In machine record, by bank. On what date? 1/4/21. By bank. How much it is? 25,000. Now look at this very carefully. This 8,60,000 worth of asset is got two component. One is 20,000 worth of asset which is sold, and remaining is 840 worth of asset. 20,000 worth of the asset, I sold at a profit of 5,000. So profit is how much? 5,000. So 20 and 5 is how much? 25. So debit side 25. On credit side also 25,000. If debit is plus, credit is minus. So 25, 25 gone. So the value of the asset which is sold, the value of the asset which is sold now became 0. That became 0 now. And you are left with remaining 8,40,000 worth of the asset. On that 40,000 depreciation gone means how much it should be? 8 lakh it should be. But it is not 8 lakh, it is 950. Which means what? During the year, further machinery you have purchased. So if you now balance the ledger, there's a balancing figure coming here. 1,50,000 is the balancing figure coming. So if the amount comes on the debit side, what does it mean? Machinery account is debit balance. To increase the machinery, debit. So if something is coming on debit side, means the value of the machinery is increased. When does the value of the machine increase? When you purchase. Primarily it is purchase. There could be other reason also. Like profit is one reason. But profit is already came, no? So what is the best possible assumption that we can take?
Purchase.
You cannot tell, no, sir, I am thinking that they sold that asset for 150 profit. Can you assume like that? Just because you are asked to assume, you cannot assume what you feel like assuming. The assumption should be logical. The assumption should be best case assumption. So what is the best assumption we can take here? So the difference could be possibly the asset that we have newly purchased. So to bank 150. So this is my new purchase of asset. Any problem in this? Anybody's got any difficulty in preparing the asset account? Please tell me. Online people, please open your mouth and respond.
No doubt, sir.
Now, please tell me one by one which item will affect where in my cash flow statement. Please tell me opening balance will affect where in the cash flow statement? Nowhere. Profit 5,000 will affect where? Sir, in segment 2, we will minus in the operating activity. Because profit is already added in your net profit. We have to remove it, minus it, because we have to add back in the investing activity through this 25,000. Correct? To bank, what is it? Sir, it's a cash outflow of investing activity. Then by depreciation. Sir, yes, segment 2 of operating activity we have to add back. By bank, cash inflow, investing activity. And this will not come in the cash flow statement. Are you able to understand? So this type of ledger preparation is going to give you so much of information. Any difficulty in this? Online people, any difficulty in this?
No, sir.
So now if you see from this ledger, there are two information pertaining to investing activity. One is cash outflow of 150 and cash inflow of 25,000. So what is my net flow? 1,25,000 negative means cash used in the investing activity. So cash flow from investing activity, payment for purchase of machinery, negative 150. Proceeds from sale of machinery, positive 25,000. So cash used in the activity is 1,25,000. Please write it down. Where do you want to separately include? Guys, now 25,000 rupees. If I ask you the breakup, what is the breakup? Say 20,000 is the cost and 5,000 rupees is the profit. So this 5,000 profit was earlier added where? In the operating activity, this 5,000 was included in the net profit. Correct only. But is that 5,000 belonging to operating activity? Is selling the asset a part of my operation? No. So this addition was correct. The place was wrong. So I'm reversing this addition by giving a minus. So in segment 2, non-cash and non-operating item, we are subtracting. Since you are subtracting to re-include, no. So I'm re-including where in this 25,000. So 25,000 has 5,000. No. So one more time 5,000, there's no point in adding anywhere. So 25,000 is nothing but cost, price plus profit put together. This is my cash inflow. So totally I'm recording in one place called as cash flow from investing activity. Now, coming back to same question, please note it down. KB Limited purchased a machine for rupees 1 lakh on 1/4/23. Depreciation 10% on cost. There's a small twist in the question. KV Limited purchased a machine for rupees 1 lakh on 1 for 23. Depreciation at 10% on cost. Full stop. Create depreciation in provision for depreciation account. Means what? In the previous question, the depreciation was recorded in the asset account. Now you are recording the depreciation in the provision for depreciation account. Rest everything is same. Please write the question. Instead of create, you can record also. Record depreciation in provision for depreciation account, or it might say that the entity is maintaining the depreciation under provision for depreciation method. Any language they can use. Done? Now, please open the ledger. Please open the machinery ledger. And you'll open one more ledger called as provision for depreciation ledger. I know that all of you have studied this properly in the foundation, but still, we have to do a quick recap. Because while doing the full-fledged question, we may not have time to sit and discuss the concept there. So I'm just doing a warm-up here so that in the main questions, you can do it very fast along with me. Machinery account, provision for depreciation account. Please tell me the posting people. First on 1/4, which date? 23. Machinery to bank. So new asset purchased for 1 lakh rupees. Next entry. Depreciation to provision for depreciation. So in the PFD account, by depreciation. On what date? Very good. 31/3/24 by depreciation. So it is 1 lakh into 10%. I'm using the asset for the entire year. So full 12 months depreciation, 10,000. That's all. Anything else to be recorded? No. So automatically I'll balance the ledger. So now on 31/3/24. By or two? Here. Two balance. Two मेरा कैसे क्या रे? Two balance carried down. How much? 10,000. So on 1/4/24, by balance brought down is 10,000. For machinery, 31/3/24. By balance carry down 1 lakh rupees. And 1/4/24 to balance brought down 1 lakh rupees. Any problem? Online people, any problem? Online people, any problem?
Sir, why we are not recording depreciation in machinery account, sir?
Because what method is this, Kana, of maintaining the depreciation?
Straight line method, sir.
That is method for calculating depreciation. Method for calculating is SLM method. What is method for accounting for depreciation?
Recorded in provision.
What is provision for depreciation? You have studied my 11 CBC foundation classes,
No, sir.
or you have studied provision for depreciation method?
Somewhat in foundation, sir.
Somewhat will not help. You have to be super thorough in the provision for depreciation method and asset disposal method, because without this, you cannot do the cash flow in the AS3. So you have to get back into touch with Anita ma'am. She will give you the recordings for provision for depreciation method. So that video you have to watch it. Adu paatha idu puriyum.
Okay,
Because in the
sir.
foundation, we spend nearly about at least four classes under each method. Each for about 2 hours. So literally I spent 7 to 8 hours on explaining this part. So again, explaining the entire thing will be difficult.
Okay, sir.
So once the video gets over, get in touch with me. I'll put you across Anita ma'am. Anybody, guys, I'm telling you, again, I'm repeating one more time. Whether you're coming from data entry route, whether you're coming from CA foundation route, I don't care. If your basics are not strong, your inter will be big time screwed. Everything that we studied in the foundation, 11, 12, if not everything, at least majority of the thing will have the implication in the CA intermediate. Not just here, when you go to articleship, when you go for final, everything will have an implication. So having a strong base is very, very important. So if anybody is lacking with the basics, please get in touch with Anita ma'am and get the recordings for the classes that you missed. Without that, it is very difficult to cope up. See, for me, there's no big deal to teach this one more time. The problem is we don't have that much time. There's a time constraint because in given time, I have to complete the entire portion of intermediate. That is not going to happen if this is getting prolonged. So Dhanasudha, your question was 100% valid. But explanation here will take away or eat away the time of the other students. That's why I'm refraining from correct noise. Even those who have already studied this in depth. If I teach this for alone 3 hours, they will feel bored. No, sir, already this year taught in 11th standard, again in 12th standard, again in foundation, one more time in inter. So they lose their patience and interest in the class. So I have to take care of all the people. So if anybody is missed out on the basics, coming from the basics is very, very important. Get in touch with Anita ma'am. She'll give you the record. Am I clear?
Okay.
Okay. Now, please tell me, people, if I open the balance sheet here, if I open the balance sheet under the old format, not schedule 3, Chuma, I'm telling. So, in the balance sheet, the machinery will be reflecting at what value? 1 lakh rupees. This is at cost. Always in the PFD method, the value of the asset will be reflecting at cost. Under normal method, the value of the asset was reflecting at WDV because you recorded the depreciation in the asset account. In the PFD method, you record the depreciation in the PFD account. So you never recorded the depreciation in the asset account, and the value of the asset even in the next year is at original cost. So in the PFD method, the value of the asset in the balance sheet will always be at original cost. In fact, the opening balance also will be at the original cost. Closing balance at the original cost. Clear? No? Concept of this was discussed long back. Now, machine they have record on the asset side. Why? Because this ledger is having what balance? Debit balance. Whenever the opening balance is coming on debit side, this becomes a debit balance item. All the debit balance item will travel to the asset side of balance sheet. Likewise, PFD is having the balance on the credit side. So this is a credit balance item. So technically, this will go to the credit side of balance sheet as PFD how much? 10,000 rupees. But this on the liability side does not make sense. So what are we doing? We're regrouping. So in the mathematics, how you have no left hand side is equal to right hand side. Like that, this is liability side, this is asset side, and the center line is like your equal to. So when I take anything from left hand side to right hand side, plus becomes minus. So this plus 10,000 when it goes to other side becomes minus 10,000. And how do we show? Less provision for depreciation. Less provision for depreciation. Less accumulated depreciation. Balance 90. Like this we used to present. And in schedule 3, all this drama of plus and minus is happening in your notes to accounts. In the schedule of the property, plant, equipment, plus and minus happens. So on the face of the balance sheet, what travels? The net value travels. Then how do I know whether this is net method or gross method? Looking at how the PFD account is appearing. The PFD account is appearing in the schedule 3 or any balance sheet means what? PFD method. If I open the balance sheet under the net method, if I open the balance sheet at the net method, what is my opening balance? 90,000. So now in the balance sheet, it will be reflecting at, machinery will be reflecting at 90,000 directly. The ledger value is directly 90,000. Whereas in the PFD method, the ledger value is how much? For machinery account, 1 lakh rupees. How it became 90? You took a help of PFD ledger, which has got the impact of reducing 10,000 from 1 lakh. And then we got this 90,000. Both at the end will be 90 only. But the presentation part, it is different. Which presentation is more better? PFD method is more better. Why? Because this gives a clarity to the users of financial statement that we have an asset which was purchased for 1 lakh rupees. So far, till date, we've used the asset for 10,000 rupees. So unused value of the asset is how much? 90,000. So this presentation gives me a better information, detailed information. Or what is the purchase value of the asset? What is the used value of the asset? What is the unused value of the asset? Whereas this information is missing under the net method. In net method, what are you telling? The total value of the asset is 90. What is the cost of the asset? How much have you used it? How much not used it? That entire information sync is not there. Hence, in schedule 3, they preferred this method. And majority of the question in your cash flow statement is also going to come from this method only. Am I loud and clear?
Yes,
Any problem in this? Okay. Now comes the main part. In the current year, you've used asset for 6 months. So what is the depreciation for 6 months? Same 5,000. So now, when will I record? Where will I record depreciation? In the PFD account. On what date? Date of sale. So on 1/10/24, by depreciation is 5,000. Total is how much? 15,000. Balance carried on is how much? 31/3/20. What is the date? 1/4/23. 24/25. No, this is 1/31/25. No, yeah, 31/25. Closing balance carried on is how much? 15,000 rupees. My question to all of you, I'm coming. Explain pannala naan. My question is, closing balance of 15,000 rupees, right or wrong? Why it is wrong? Sir, always in the closing balance. Closing balance represents what? Closing balance represents accumulated depreciation. Accumulated depreciation of which asset? That asset which is still being used in the business. This 15,000 worth of accumulated depreciation is not being used in the business. In our example, it is sold. Always remember, the closing balance of the PFD account should represent what? Accumulated depreciation. Accumulated depreciation of which asset? That asset which is still being used in the business. In this business, am I using this 15,000 worth of asset? No, I've sold it. So technically, in my example, the balance carried on should be what? 0. Now, how do you think I can make this 0? So in that case, I have to record something on the debit side. If I record 15,000 somewhere here, 15,000 on credit plus 15,000 on debit minus will lead to this balance becoming 0. Since 15,000 rupees, what I'm recording on the debit side is nothing but I'm transferring this accumulated depreciation from the depreciation account, that is accumulated depreciation account, to the machinery account. So 15,000 rupees is the transfer of the accumulated depreciation from the PFD account to the machine account. So where am I transferring? To the machinery account. So when I transfer this, the value in the PFD ledger decreases. PFD ledger is what balance? Credit balance. To increase PFD balance, credit. To decrease, debit. So my intention is to decrease. So PFD account, debit. And where am I transferring this to? Machine account. When I transfer this to machine account, will the machine value increase? No, because the accumulated depreciation is again got the tendency of decreasing the value of the asset. So what is the entry? PFD to machine. So in the PFD account, to machine 15,000. Am I teaching anything new? This is something which you already studied in 11th standard, again in 12th when we did cash flow there, again in foundation when we did the entire depreciation topic, and now again in intermediate I'm revising that. And in the machine account it should be by provision for depreciation. So on 1/10/24, by provision for depreciation, how much? 15,000 rupees. Any problem?
No, sir.
Now the value of the PFD ledger has become 0. The value of the PFD ledger, closing balance, carry on balance is 0. Sir, in every question, should the PFD become 0? No. In this question, had we had any other asset, that asset's accumulated depreciation would have come. In this example, whatever asset I had, everything I sold. Hence, the closing balance is 0. When the closing balance will not be 0, had I had any other machine in the business which I'm using, its accumulated depreciation till the end of the year would have come in the closing balance. Am I loud and clear?
Yes, sir.
Now, for this, under normal method of depreciation, under net method, I told you 3 monkey entry. Monkey 1, monkey 2, monkey 3. Here 4 entry. Monkey 1, monkey 1A, monkey 2, monkey 3. So one baby monkey is coming in between. So monkey 1A. No, sorry, monkey 1 entry. What is monkey 1 entry? Sir, depreciation for the asset from the beginning of the year till the date of sale of asset. What is entry for that? Depreciation account debit to PFD account. How much? 5,000, 5,000. Any problem? Now comes a new entry called as monkey 1A. Monkey 1A. Baby monkey entry. Which means what? Whatever is the accumulated depreciation. Listen to my words very carefully. Whatever is the accumulated depreciation of the asset which is sold. That is 10,000 of previous year, 5,000 of current year, 15,000. We have to remove that from the PFD account, record in asset account. When I do so, the value of the PFD ledger becomes zero. So PFD is credit balance. PFD is always credit balance. To increase a liability, credit. To decrease liability, debit. So my intention is to reduce the amount in the PFD account. So PFD account debit 15,000 to machinery account. And this 15,000, when I record in the machinery account, this will again have a tendency to reduce my asset value. So again, 15,000 credited in the machinery account. This is the monkey one entry, which will affect two places. One, it will affect the PFD account. Second, it will affect the machinery account. So one entry affecting two places. One entry affecting two places. Both are important for your working notes. So this and this always will come simultaneously. This and this will come always together. Now tell me people, what is the value of the asset as per your book now? Sir, original cost of the asset is how much? 1 lakh. Minus accumulated depreciation 15,000. 1 lakh rupees is appearing in the debit side of your machinery account. 1 lakh is appearing on the debit side of machinery account. 50, which is on the debit side. This is debit side. Debit means plus. 15,000 rupees is appearing on the credit side of the machinery account now. Credit, debit is plus means credit is minus. So 1 lakh minus 15,000. What is the value of the asset in your book? WDV is 85,000. You see, accumulated depreciation is appearing on the credit side of machinery account. If I net this, what is my net balance? 85,000. Now this 85,000 worth of the asset, you sold it for 70,000 rupees in case 1. So what is your loss now? 15,000 is your loss. So now monkey 2 will help me in case of adjusting the value of the asset as per the money that is going to come to me in future. So now in your book, the value of the asset is 85,000. The money that you're going to receive is how much? 70. So now you have to match this with this. So to reduce the value of the asset by 15,000. 15,000. So what is my monkey 2 entry? Loss account debit to machinery account. How much? 15,000. 15,000. So in the machinery account, buy loss. Buy loss. Buy loss how much? 15,000. So please tell me what is the value of the asset in your books now? Sir, 1 lakh minus 15 minus 15. What is balance? 70. So 70,000 worth of asset is going out and 70,000 money is coming in. Debit what comes in? Money coming in bank. Credit what goes out. So buy back how much? 70,000 rupees. Buy bank 70,000 rupees. Now the value of the asset technically becomes 0. Any problem? Any problem? Online people, any problem?
No, sir.
No, sir.
So write down the monkey 3 entry, bank account debit to machinery account. $70,000. In case 2, what will happen? In case 2, instead of this loss coming 15,000 here, 2 profit will come how much? 10,000. So 1 lakh plus 10 is how much? 1 lakh 10,000. Minus 15,000 is how much? 95,000. And buy bank is how much? 95,000. Instead of loss, put profit. Rest all same. Do it. What? No, you have to do it. Fast. Case 2, you have to do it. Case 1 I completed. Case 2 again. Please open the machine account separately. Please open the PFD account separately. I want both separately to be done. You finish the second case also. Case 2. How? இப்பதான் பண்ண சொன்னேன். That was case 1. Case 2 again, you did it the entire ledger, machinery, PFT, everything. Ultra fast. The game is not yet over. Think about asset disposal. Am I sitting and teaching all this concept today? What are we doing? A revision. Teaching was done long back. Imagine Balaji, you come and sit with me directly in inter. What would have happened? Everything would have been Greek and Latin. And today, look at how we are answering. So 1 year before, you thought you'll sit with Pratik sir and be answering in the class like this. I still remember 1 year ago, Balaji came exactly this time only, wondering what to do, what not to do. Ilya, March 24, is it? Correct, his program he came. You were not mentally prepared, no? That I'll make you go through that extra classes for 1 year. You came thinking that you'll directly do C inter, no? But you regret your decision or you're happy with it? Same thing, Albin Siddharth also. Yeah. Done? So if I have to do a quick summary of the machinery ledger, so what all can come in the machinery account? Under normal method or net method, whatever you say. In the asset account, what all comes? Sir, opening balance will come. On 1/4, 2 balance brought on will come. Then when you buy the asset, new purchase. So 2 cash or bank will come. Purchase of new asset. Correct? If the asset is not sold, if any part of the asset is not sold, its depreciation will come. Its depreciation will come for asset still in use. If the asset is sold, 3 monkeys will come. If the asset is sold somewhere in the middle of the year, then from beginning till that date of sale, depreciation will come. So by depreciation, we call this monkey 1. This will come only if the asset is sold somewhere in the middle of the year. If the asset is sold in the beginning of the year itself, means then monkey 1 entry, this will not come. Do you agree with me? Second, monkey 2 entry will be profit or loss. So if it is profit, to profit. If it is loss, by loss. So monkey 1 and monkey 2 entry will ensure that the value of the asset becomes equal to the money that you're going to receive. So once it becomes equal, the money that I'm going to receive will be in the bank account. So by bank or cash account will be the monkey 3 entry. So this is monkey 2 and this is monkey 3. I'm trying to tell the maximum possibility that is, coming in the machinery account. Any problem? This will not go to your cash flow statement. This will not go to your cash flow statement. That is balance carried down. By balance carried down is the final amount. This will not travel to your cash flow statement. Whereas to cash in bank is nothing but cash outflow of the investing activity. This will be affecting your segment 2 of the operating activity. What will you do? You will minus. It is already added profit. To remove, you have to minus. Depreciation. This and this both put together. In segment 2, we have to add back of the operating activity. Loss. Segment 2, we have to add back. bank cash inflow of the investing activity. Are you able to visualize all this? This is the asset ledger under the net method or normal method. Now comes the asset account in your gross method, that is provision for depreciation method. In that case, what happens? So opening balance it comes. To balance brought on, opening balance will come. If any asset is purchased, so to cash or bank will come. Correct? Here opening balance of provision will come. And here the closing balance of provision will come. Current year, if there is any depreciation, it will come here. Whether it is, on the asset that is sold or used in the business still, all the depreciation put together will come together in one shot. Date will be different. The asset is sold on 110, then buy depreciation on 110. If the depreciation is on the asset which is still being used in the business, that depreciation will be on 31/3. So date will change, but the total depreciation comes on the credit side always. So now opening balance of depreciation plus current year depreciation, this is the total depreciation. From the total depreciation, you have to minus the accumulated depreciation of that asset which is not there in the business. So this is our transferring where? To machine account, to machine account. So now I'll be left with the accumulated depreciation of that asset which is still being used in the business. Which is still being used in the business. Imagine 1 lakh is the opening balance of the asset. Sorry, opening balance of the accumulated depreciation. Means what? Opening balance of accumulated depreciation. Current year, you've used the asset for, let's say, 50,000 rupees. So what is the total depreciation? 1,50,000 rupees is total depreciation. In that, you have sold an asset whose accumulated depreciation is 25,000. So if I minus 25,000 here, I'm getting 1,25,000, which is what? Accumulated depreciation of that asset which is still being used in the business. So 1,50,000 rupees is the total value of the depreciation of all the assets used, sold, everything put together. From that, if I minus 25,000 rupees accumulated depreciation of the asset that is sold, I'll be left with 1,25,000, which is accumulated depreciation of that asset which is still being used in the business. And this entry will come here by PFD. Monkey 1A entry will come here. Monkey 2 entry is what? Profit or loss. Profit means to profit, no change. Loss means by loss, no change. And after these two entries, the value of the asset will be equal to the money that you're going to receive in the bank. So now third entry you can pass. By bank, how much? Not how much, sir. Sorry. By bank, yes. Then anything else. By balance, carried on. Very good. That's all. So what is the difference between the normal method and the PFD method? Say in the normal method, you have the current year depreciation in the asset account for the asset that is sold. Whereas you have here entire accumulated depreciation of the asset that is being sold. Rest all is the same. Apart from these two items, everything else is the same. Any problem in this? Now, opening balance of the asset will not go anywhere in the cash flow statement, nor the closing balance. But this is what? Cash outflow of the investing activity. Profit segment 2 we have to minus. PFD, what will I do with this? No impact on the cash flow statement. PFD will have no impact on the cash flow statement. Loss, segment 2 we have to add back. By bank, cash inflow of the investing activity. Opening balance, closing balance will not come anywhere. Depreciation, segment 2, I will add back. This will not come anywhere. Transferring of accumulated depreciation from the machine account to from PFD account to machine account will not impact your cash flow statement. Are you able to follow? Now, what I discussed, now please understand. Two methods for calculating depreciation. Means what? Straight line method and WDV method. Technically, we have more method. In foundation, we study something called as production unit method, machine hour rate method, depletion method, sum of years digit method. That is also there. But what are the two primary methods of calculating depreciation? SLM and WDV. Then comes two methods for accounting depreciation. One is net method or normal method. Second is gross method or PFD method. These are the two methods of accounting depreciation. Means that how am I going to account the depreciation? If I'm accounting depreciation in the asset account, then that becomes net method. If I'm accounting the depreciation under PFD account, then it becomes PFD method. Like that, we have two methods now for recording the sale of asset. One is again normal method. Second is asset disposal method. Means in normal method, you record the disposal of the asset where in the asset account itself. Like if you see here, I recorded the disposal of the asset. That is PFD account, loss account, profit account, bank account. That is the sale value. Everything is recorded in the machine account itself. So this becomes normal method. So when I record all the disposal related information in the asset account, then this becomes the normal method. But sometime I told you in the foundation level, sometimes the company sells multiple assets during the year. So imagine for every asset sold, you're recording 3 entry. Monkey 1 entry, monkey 2 entry, and monkey 3 entry. Like that, you're recording 3 entries for each asset sold. Like that, in a business, if I sell, let's say 10 assets. How many assets? 10 assets. Each asset, 3 entry. 10 assets, 30 entry if I record in the machinery account. Don't you think my machinery ledger will be overloaded with multiple entries? It'll tend to confuse us. So in that case, all this disposal related information, you will take to a separate account called as asset disposal account. Which account? Asset disposal account. So when you record the monkey 1, monkey 2, monkey 3 entry, that is monkey 1 plus 2 plus 3. All these 3 entry, when you record in the asset account itself, it becomes your normal method. Asset disposal method is a method where the monkey 1 plus 2 plus 3 entry is not recorded where? In your normal, that is asset account. It is recorded now where? In your asset disposal account. Let's go back to our original question. First question which you did. You recorded the information related to monkey 1 depreciation, monkey 2 profit, and monkey 3 in your bank account. So instead of recording this 3 here, we have record where? In the asset disposal account, which means all this data will now be recorded where? In your asset disposal account. So now I'm opening a separate account called as asset disposal account. I'm coming. We are doing about the normal method of depreciation. So this is your asset disposal account. Do you agree with me? Now, these 3 data, I'm not supposed to record where? In the asset account. Now look at this data, people. 1,423, I purchased the asset. I've used the asset till the end of the year for 10,000. So unused value of the asset 90,000. That becomes the opening balance. Now this asset is sold. Now this asset which is sold, this asset's cost value WDV should be transferred to asset disposal, and corresponding 3 monkey entries should be recorded where? In the asset disposal. Now please tell me what will be the entry for transferring this opening balance from the machinery account to machinery disposal account. Sir, when I'm transferring this, the value of the asset reduces in the asset account, increases in the asset disposal account. To increase the value of the asset, debit. To decrease the value of the asset, credit. I'm increasing the value of the asset in the disposal account. So machinery disposal account, debit. And where am I decreasing to? Machinery account. So to machinery account. So machinery account to machinery disposal. So in the machinery account, by machinery disposal, 90,000. The value of the asset becomes 0 in the machinery account. And in the asset disposal account, what will be the entry? To machinery account. To machinery account, how much? 90,000 rupees. To machinery account, 90,000 rupees. Any problem with this? Now, monkey 1, monkey 2, monkey 3. All the 3 entries will now happen where? In the asset disposal account. So what will be my journal entry? Depreciation to machinery disposal. Loss to machinery disposal. Profit means profit, machinery disposal to profit. Bank means bank to machinery disposal. So instead of machinery account, it is now going to be machinery disposal. That's all is the change. So by depreciation, 5,000. By loss, how much? 15,000. By bank is how much? 70,000. Total is how much? 90,000 credit minus. Total here 90,000 debit plus. Any problem here?
Sir, in foundation, we use the
Wait. I heard your query. Now, if there is a loss, if there is a profit, then to profit will come How much is profit? 10,000. No, sorry. 10,000 is profit. And buy bank is going to be 95,000. That's all. Same presentation. But instead of having that in the asset account, now it is happening in the asset disposal account. So the monkey 1, 2, 3 entry, instead of machinery account, it is machinery disposal account. You will do this correctly. But what you will not do is, you will not transfer the machinery value from the asset account to disposal account. This you have to take care. If you don't transfer, what will happen? This asset disposal ledger will not close. And you cannot keep the balance pending in the disposal account. So automatically you understand that you've made a mistake. In other words, after you record the opening balance in the disposal account, and after you record all the 3 monkey entries, the value of the asset technically should be 0. There should be no balance of the disposal account. The purpose of the disposal account is to only write the information pertaining to disposal. So if you're selling 10 assets, you'll open 10 disposal account. So in each disposal account, I will get the information properly. If I don't have the disposal account, if I record those 10 into 3, 30 entries in the machinery account, I will not know which profit is for which asset, which loss is for which asset, which depreciation for which asset. It will be confusing. So instead of recording everything clustered in one ledger, we are recording in 10 different ledger called as disposal account. More practical, more easy it is. Yes, boss. Sorry? Asset disposal is the disposal account you prepare at the end. So whatever is the value of the asset in the asset account, that you transfer to the disposal account. And rest all the 3 monkeys will entry will come here. Any doubt here? No problem. Can I go forward? Now this is the asset disposal under which method? Normal method. Now asset disposal will come under PFD method also. Can I prepare that? Now asset disposal under PFD method. Now in PFD method, the value of the asset on 1/4/24 is on what date? I mean on 1/4/24 is at what value? 1 lakh. If I come here, machinery account, opening balance 1 lakh, closing 1 lakh. Next year opening also 1 lakh. So this 1 lakh I have to transfer where now? To machinery disposal account. So what is the entry for this? Machinery disposal account debit to machinery account. So 1/4/24 to machinery account 1 lakh rupees. I'm transferring the original cost to the machinery disposal account. Now record all the 3 monkey entries. Monkey 1 entry depreciation will go where? Your PFD account. Now monkey 1A entry, monkey 2 entry, and monkey 3 entry, instead of machinery account will come to your asset disposal account. So buy provision for depreciation, how much? 15,000. Buy loss, how much? 15,000. Buy bank value, how much? 70,000. Ledger closed. If it is profit, instead of buy loss, to profit, how much? 10,000. And buy bank will be how much? 95,000. Any problem? Now, Kritin was telling, sir, in the foundation, you said that depreciation will go to this account, that account. I'm telling you, at inter-level, they're not going to check your depreciation concept. For convenience sake, all the monkey 1, monkey 2, monkey 3 entry record in disposal account. In foundation, I told you that this depreciation is there, no? This depreciation you record where? In the PFD account. Sorry, in the machinery account. In the machinery account. And I told you loss and bank alone to record here where? In the asset disposal account, because that is what was expected in CA foundation. And we had specific question based on that, so I had to tell you that way. Now, they are not going to test you on that concept. Here you're opening the asset disposal account or machinery account or depreciation account to find out what is the depreciation value, what is asset purchase, what is asset sold, so that I can take to the various activities. But for convenience sake, what I'm telling is record all the 3 monkey in one place, or else you will get confused. Yes. Record everything in one place. So if you see here, PFD method, monkey 1A only will come here, my dear. Monkey 1 depreciation will go to PFD account only.
So I'll take the segment 2 will take only 5,000.
Segment 2, what will take? Current year depreciation. Yes. Yes. Guys, are you able to follow? Now, listen to very carefully. Under asset disposal method, machinery account, machinery disposal account. Okay. Opening balance was how much? I'm talking about normal method. Opening balance was 90,000. This 90,000 where did you transfer? Machinery account. So on 1/4 you transfer to machinery account or whatever date you transferred. So by machinery disposal, what am I doing? I'm summarizing and I'm telling you the impact of this in the cash flow statement. So by machinery disposal, 90,000, ledger closed. So here to machinery account, how much? 90,000. By depreciation, how much? 5,000. No, this is normal method. WDV means what? Normal method. By depreciation, 5,000. By loss, 15,000. And by bank, 70,000. Any problem?
No, sir.
Now I'm doing a summary of this and telling you the impact that is going to happen on the cash flow statement. Will this have any impact in the cash flow statement? No. Will this have any impact on the cash flow statement? No, because there's no movement. Will this have any impact in the cash flow statement? No. Will this have any impact in the cash flow statement? Yes. Segment 2 you have to add back. Loss, segment 2 we have to add back. And this is cash inflow of the investing activity. If any purchase is done, then that purchase will come here. If purchase of the asset comes, it will not come here, it will come on the machinery account. So in the asset disposal method, the purchase will come in the machinery account and the sale of the asset value will come in the machinery disposal account. Any problem in this? Now, asset disposal under PFD method. Under PFD method, how many ledger you are supposed to open? 3 ledger I am supposed to open. One is machinery account, one is PFD account, one is machinery disposal account. What is opening balance? Brought on balance is how much? 1 lakh rupees in the machinery account. Now this machinery value is sold. So no longer need to be in the machinery account. I'll transfer to machinery disposal account. So what is my closing entry? Machinery disposal to machinery. In machinery account, by machinery disposal. So by machinery disposal, how much? 1 lakh. So balance is over. In the machinery disposal account, to machinery account, how much? 1 lakh. Balance brought on of PFD is how much? 10,000. Current year depreciation will come in the PFD account. Current year depreciation in PFD account. How much? 5,000. What is total depreciation? 15,000. So this 15,000 I have to transfer there now. Not a machinery account. Machinery disposal account now. So to machinery disposal 15,000. Closing balance how much? 0. Closing balance 0. And in machinery disposal account, by PFD how much? Monkey 1A how much? 15,000. By loss 15,000. By bank 70,000. By bank 70,000. I kept the data same for every question so that you don't confuse with the value. Now, this will not affect my cash flow statement. Nor this will affect my cash flow statement. Nor this will affect my cash flow statement. Nor this is affecting my cash flow statement. You know, this will also not affect your cash flow statement. Whereas depreciation in the PFD method, in the PFD account, under asset disposal method, everything, whatever you say, will be added in segment 2. Whether you do asset disposal method, normal method, PFD method, depreciation will be there in the PFD account only. This will not affect your cash flow statement. This will not affect your cash flow statement. Loss 15,000, segment 2, add back. Segment 2, add back. By bank, cash inflow of the investing activity. Asset purchased, purchase value come in the machinery account. I'm just making you understand how this ledger looks like, which data will come where, and what relevance it has got to cash flow statement. That perspective I gave you. Any problem in this? Online people, any problem with this?
No, sir.
Chalo, great. In that case, let's do one question from your TSQL book again. Now that you become pro, 38 questions should be jujjubi. From the following information, calculate the cash flow from investing activity. Opening balance is given, closing balance is given. Machinery at cost is given. So, chumma they've given, sir. This is irrelevant, sir. Ignore it, sir. Is it important? Not important. Not important. Why? Because in the next line I have accumulated depreciation. So if the accumulated depreciation ledger balance is given, what does it mean? Machinery by default it is at cost. Separately at cost, there is no need for me to get any information. When they give accumulated depreciation balance separately, it means what? The asset is at cost under accumulated depreciation method. Under accumulated depreciation method, always the asset value will be at cost, at cost, at cost. Any problem? Guys, are you able to follow? So this at cost is not important for me to understand. It is understood that if I'm having accumulated depreciation ledger balance, it means that depreciation is recorded in the PFD account. So obviously, when the depreciation is not recorded in the asset account, asset will be always at cost. You know, asset will always be at cost. Patent 160, 280. Okay, wonderful. Additional information. During the year, a machine costing 40,000 with its accumulated depreciation of 24,000 was sold for 20,000. Patent written off 40,000 and some patent is sold at a profit of 20,000. Manageable? Not manageable, not manageable. Okay. Let's do it. Open two ledger, machinery ledger and PFD ledger. What revision what we did today, and the question that we are working out now is a trailer. The question what they're going to actually ask in cash flow statement is a real picture, which is yet to come. This is all warm-up questions only. Machine account. Please tell me what is opening balance? 4 lakh. Which side? Debit side. To balance brought down 4 lakh rupees. And okay, asset is sold. No. Did they ask you to open the asset disposal account? No. So disposal is happening in the machinery account itself. So there are two methods for calculating depreciation: SLM and WDV. I'm not bothered because they have themselves given the depreciation. There are two methods for accounting depreciation. Which method is? PFD method, because we have accumulated depreciation ledger. And there are two methods for accounting the sale of the asset. Since your asset disposal account is not opened, all the asset disposal is recorded in the machinery account itself. So you have to be clear with these three methods. Now, what is the closing balance of the asset? By balance carried on how much? 4,20,000 rupees. Okay. Provision for depreciation ledger. What is the opening balance? 1 lakh rupees. Online people, are you all with me? Gana Sudha, Jayesh, Pavitra, Reshma, Sushmita.
Yes, sir.
Sushmita?
Yes, sir.
Okay. Reshma, Pavitra. Pavitra. Abu is not responding. To balance carry down. How much? 1,10,000 rupees. 1,10,000 rupees. Okay. What did I do? Just copy pasted the opening and closing balance. Now, read the adjustment. During the year, a machine costing 40,000 with its accumulated depreciation 24,000 was sold for 20,000. Working note, calculation of profit and loss. Original cost is how much? 40,000. 40,000 is the original cost of the asset. In that, how much worth of the asset you've used? What is your accumulated depreciation? Usage value of the asset is how much? 24,000. You've used 24,000 worth of asset. So what is unused value of the asset? 16,000 is unused value of the asset. We call this as WDV or book value. This 16,000 worth of the asset is sold for 20,000. So sale value how much? 20,000. Profit or loss? 4,000 profit. So all the three monkey can I record in the machinery account? Sir, all the three monkey will not go there. And first of all, for your information, here there are three monkey. There are four monkey. Monkey 1 depreciation goes to your PFD account. Whereas monkey 1A, monkey 2, monkey 3 goes to your machinery account. Now, depreciation, how much is not given, sir? So question is wrong, sir. Where is the depreciation in the entire question? Tell me. Sir, depreciation is not there, sir. How will if I say like this? They should give information on depreciation or not there. So I'm telling depreciation is not there. That is your inner voice I'm telling. I'm not telling. Your inner voice, sir, depreciation not there, sir. There or not there? If you tell there, that will be the answer. Nishi is now only woken. Good morning. Karna, with the accumulated depreciation 24,000 you're talking about. Karna, this is patent written off. I'm talking about machinery now. What is machinery's depreciation? What by you completed 12th? Foundation also completed, sitting in intermediate, still thinking what to do. Yeah.
24,000.
Donkey fellow, 24,000 is what? Rightly said. Kritan is saying, sir, 24,000 is what? Accumulated depreciation. Whenever the asset is sold, you transfer the accumulated depreciation from PFD account to machinery account. So now, to machinery account, how much? 24,000. So your depreciation is going to be your balancing figure. I doubt you pass foundation properly. You go and write one more time. What is your, not what is your, what is the depreciation here? 34,000 is depreciation. Any problem? Now monkey 1 entry in the machinery account. So by PFD how much? 24,000. Monkey 2 entry. Monkey 2 entry. 2 profit. Very good. So 2 profit 4,000. Smriti has got it right. Next. Monkey 3 entry. By bank how much? 16 or 20? 20,000 rupees is by bank. So clear with the concept, which entry is coming where, there is no need to brainstorm so much. That's all. Guys, your PFD ledger is over. Machinery ledger, if it is tallying automatically, then no other transaction in the machinery account. But if the machinery account is not tallying, then it means something else also. What is it?
Purchase of machinery.
Which means you're telling there is a balance coming here. How much?
60,000.
60. This is nothing but further purchase of the asset. So to bank, 60,000 purchase value of the asset. Any problem? Please tell me, where will this go to cash flow statement? Nowhere. Where will this go to cash flow statement? Segment 2, we have to minus operating activity. Wonderful. This cash inflow or outflow? Outflow of the investing activity. Then PFD. Nowhere. Bank. Cash inflow, investing activity. Closing balance. Nowhere. Opening balance, closing balance. Nowhere. This transfer entry also nowhere. Here, segment 2, I will add back. Here, what have they asked? Cash flow from investing activity. So you have two things only. One is purchase of the machine. Second is sale of the machine. Purchase is how much? 60,000. Sale is how much? 20,000. So proceeds from sale of machinery 20,000. Proceeds from, sorry, payment of machinery is 60,000. Negative. Easy.
Yes, sir.
Next, can I do it? Patent. Patent written off. Sold for 20,000. Na? Sold for, sale value is 20,000. Patent I'm coming. Patent I didn't do it. Now, if you see here, guys, for machinery, what method of accounting depreciation they have followed? Provision for depreciation method. Whereas for patent, do you find any accumulated patent? Accumulated what you call amortization? No. Which means the amortization of the patent is recorded in the patent account. So this is normal method, net method for patent. So please open the ledger. Please open the patent ledger. Opening balance, please. Opening balance, please. 2,80,000. Okay. Closing balance, please. 1,60,000. Okay. Now, patent written off 40,000. Patent written off during the year is 40,000. Patent written off means amortization. What is the entry? Amortization account debit to patent. In patent account, by amortization. So by amortization, 40,000. Some patent were sold at a profit of 20,000. Some patent were sold at a profit of 20,000. Now, what is the sale value? Not given. Sale value, what it is? Not given. See, I want three information. Accumulated depreciation of the patent that is being sold. Loss of profit and sale value. Nothing is given. Only sold at a profit of 20,000 is given. So what is the journal entry for profit? Patent to profit. So in patent account, 2 profit how much?
20,000.
2 profit 20,000. Sale value of the patent is not given. That will be the balancing figure.
1 lakh.
1 lakh rupees is the balancing figure. By bank. So it is not necessary that always the purchase value of the asset is the balancing figure. Anything can come as a balancing figure. Now, which will affect what segment? Opening, closing, nowhere. Profit will affect my segment 2. I need to minus. Amortization segment 2 I need to add back. Buy bank, cash inflow, investing activity. So proceeds from sale of patent. Proceeds from sale of patent, 1 lakh rupees. All these are warm-up questions. All the other questions pertaining to investing activity, I want to take it as homework. Do you want me to do any question based on the financing activity individually, or if I combine with the main question, that is sufficient?
Combined with the main question.
In your financing activities, there's no adjustment. So basically, they'll give you the information on the equity share capital raised. That could be because of, by issue of consideration in cash, or it could be bonus issue, or it could be for consideration other than cash. Like that small adjustment will be there that we can do directly in the main question also. Yes.
Small example, provision of tax and advance tax separate.
The provision for tax, advance tax, I told you I'll do it separately when the right time comes. That time is not come yet, because I'm trying to give you the warm-up questions for the question that I can, manage for next 2-3 classes. So I'm planning to solve at least 7 ICA questions. For that, this level is required. There are a few ICA questions which is complicated. At that point of time, I'll discuss provision for tax and advance tax. Maybe if you want, I can do one question under financing activity. Let's do it, people. Come on. Forty-fifth question. In the textbook, what you have, it should be 44 or 45. Either it should be 44 or 45. In my textbook, it is 45. In PDF, sorry, in PDF it is 45. In textbook, it is 44. Anyways, for you also it is 45 only. 44. Okay. Whatever it is, one question here and there it could be. From the following information, determine the cash flow from the financing activities. Financing activities. Online people, can I continue?
Yes, sir.
Yes, sir.
Guys, this is the previous year. This is the current year. Previous year balance was 4 lakh. Current year balance, it became 5 lakh. How? There is increase in the capital by 1 lakh. Increase in capital can happen in multiple ways. Issue of share for cash means what? I'm issuing share. In return, what am I getting? Cash. Will this affect my cash flow statement? Yes. So this is cash inflow. Second, issue of share for consideration other than cash. Means I'm issuing the share, but in return I'm not getting cash. What am I getting? I'm getting asset, I'm getting business, I'm getting any service, something I'm getting other than cash. Will this affect my cash flow statement? No, this will not affect my cash flow statement. So this is no flow. See, issue of share as bonus. So share capital is increasing, but the amount is getting transferred from your reserves to capital. Am I getting any fresh cash inflow? No. So this is also no flow. Now here in this question, if you look at the additional information, there is no information about the equity share capital. So out of these three, which is the best assumption that you will take? Sir, nothing mentioned means shares are issued for cash because this is the maximum possible scenario. So the question is silent about the type of the shares issued. It is always for cash. So can I say from 4 lakh it became 5 lakh because during the year 1 lakh shares were issued? Any problem? So now cash proceeds from issue of shares is how much? 1 lakh. So this is cash inflow. So added 1 lakh in the cash flow from financing activities. Any problem? Just observe, take this as homework. Don't do anything. Just observe. Just observe. Next, look at this 10% debenture. From 150, it became 1 lakh. From 150, it became 1 lakh. Redemption of debenture. Redemption of debenture. Repayment of debentures. How much repaid? 50,000 repaid. 50,000 repaid. So cash outflow. Redemption of debenture 50,000 cash outflow. Security premium 40,000 to 50,000. How much increase? 10,000 increase. How much is the capital increased? 1 lakh increased. So it looks like the shares were issued at premium of 10%. So here premium money is received in cash. Nothing mentioned. So whenever the premium increases and nothing is mentioned, always premium is received in cash. And what is the supporting evidence? The supporting evidence is that we have issued the shares for cash. So chances are that the premium is increased because the shares are issued at premium of 10%. Because 10,000 divided by 1 lakh into 100 is how much? 10%. So the chances are that the shares are issued for 10% premium. So here again premium is received in cash. So cash inflow. So security premium received how much? Cash inflow. Positive 10,000. Any problem? Bank overdraft from 1 lakh 50 became 2 lakh. Bank overdraft means it's a kind of loan taken from the bank. 50,000 rupees extra loan taken. So it is cash inflow. So increase in bank overdraft 50,000 cash inflow. Interest paid on debenture 10,000. Interest paid on debenture 10,000 cash outflow. So interest paid on debenture 10,000 cash outflow. Interest on bank overdraft 15,000, previous year 10,000. This is for given for confusion purpose. Leave it. Interest on bank overdraft 15,000 paid cash outflow. So interest on bank overdraft paid cash outflow. Sir, how do you know it is paid? The word paid is not given. Donkey fellow, if the word paid is not given, it is outstanding. If it is outstanding, then interest on bank overdraft outstanding would have appeared in the balance sheet. If that is not appearing, means interest is paid. 15,000 interest paid. Any problem? Now, sir, why did you cut this previous year 10,000? Donkey fellow, they didn't give the question information properly. When you look at this word previous year 10,000, it might sound that you are paid in the current year. But you look at the answer, they have not paid. Which means they have given this information only to confuse us. This kind of question will not come in ICA. They'll tell you very clearly what is done, paid or not paid. So this you leave it. Now tell me people, all the items have marked it. Do you have any problem with this? No problem. Easy it is. Okay. One more question with that we'll wrap up. In your 12th standard and in CA Foundation, whenever the date of purchase of the asset and the sale of the asset is not given, we assume that the asset is purchased and sold at the beginning of the financial, at the end of the financial year. At the end of the financial year. But in CA Intermediate, they have gone with the opposite assumption. If you look at all the questions that the ICA solved, wherever the question is silent about the date of purchase of the asset, the date of the sale of the asset, the date of issue of share capital, the date of redemption of capital, the date of issue of debenture, the date of redemption of debenture, wherever the date is silent, always they have assumed in the intermediate level for cash flow statement, all that is happened in the beginning of the financial year. So assumption needs to be changed here. With that assumption, they solve it. So you will also use the same assumption in the exam. Since the question is silent about the date of issue of capital, date of redemption of debenture, we assume that the issue and redemption has happened in the beginning of the financial year. You'll give the assumption and solve it in that way. Because all the ICA questions they have solved in that way only. We will also solve in same lines. We will not try to do something which is different. Though you can do it, but we will not do it because if the answer key and your answer doesn't match, you'll be in trouble. Hence, we'll go with the same assumption which I say is going with it. Any problem in it?
No, sir.
Now, 46 question I'm taking, and I'm here changing this question. Interest paid on debenture instead of 10,000, I'm making 16,000. And fourth one, assume debenture issued bar redeemed at the beginning of financial year. These two are the changes you're supposed to do. Please do it. I'm changing the interest paid from 10,000 to 16,000 and assume debenture issued or redeemed at the beginning of financial year. These two changes. Can I do now? Now, guys, opening balance of the equity share capital 10 lakh. Closing balance 15 lakh. Do one more change. During the year, the bonus issue is 2:1. No, wrong it is. It's just 1:2. Please change it 1:2. Now, look at the point number 3. Point number 3 is giving me some information which is relevant for equity share capital. What is point number 3 saying, sir? It is saying that during the year, this company has issued a bonus share. Bonus share will always increase my capital. And the ratio is 1:2. Ratio is 1:2. So what is my opening capital? 10 lakh. Into 1/2. 1:2 means in the fraction, how do you write? 1/2. How much it is? 5 lakh. Which means 10 lakh plus 5 lakh is how much? 15 lakh is the total capital. So which means it is understood that the increase in the capital is purely because of the bonus issue. Bonus issue, does it lead to cash inflow? No. It is capitalization of your reserves. There's no fresh inflow coming inside. Hence, this 5 lakh movement is there. No, will not affect my cash flow from financing activities. Am I loud and clear? This will not affect the cash flow from financing activities. So if you see here, there is no information about the equity share capital issued because there is no flow. Next, debenture, 10% debenture, opening balance was 1 lakh. Opening balance was 1 lakh. By the time we came to the end of the year, it became 0. Which means during the year, debentures were redeemed. When? Beginning of the financial year. In the beginning itself, it is redeemed. So it is cash outflow of the financing activity. So redemption of 10% debenture, 1 lakh is the cash outflow. Any problem?
Yes.
On that, will you calculate any interest?
No, sir.
No, sir. On the first day itself, I have given it back. So on that, I will not calculate any interest. Any problem?
No, sir.
Then 8% debenture, previous year closing balance 0. And a current year, it is 2 lakh. How? Issue of debenture. When is the debenture issued? Whenever the question is silent about the issue of debenture, it is beginning of the financial year. So 2 lakh worth of debenture issued in the beginning itself. Inflow or outflow? Inflow. So proceeds from issue of debenture, cash inflow, 2 lakh rupees.
Interest.
Now, interest paid on debenture, 16,000. Now the question is, interest is paid fully or not paid fully? Now we have to calculate. Sir, 2 lakh is the value of the debenture issued in the beginning of the financial year. Into 8% means how much? 16,000. It is fully paid. Now this will affect how many places? 2 places. Interest on debenture would have been subtracted in your finance cost for calculating net profit before tax and extraordinary item. That is right, but the place is wrong. So I have to add back in segment 2. And since the money is paid, I'll minus in the financing activity. Am I clear?
Yes, sir.
Now, imagine had this not been 16,000, had it been only 10,000. 10,000 is paid, 6,000 not paid. 6,000 not paid, 10,000 paid. So this 10,000 will come in 2 places. In segment 2, you will add back, and in financing activity, you will minus because it is paid. It is paid. Remaining 6,000, interest is not paid. Outstanding interest on debenture will come. Now, in segment 2, you will add back, not in segment 3. This always goes to segment 2. Segment 2 will add back. But in financing activity, will not minus because it is not paid.
Why not segment three?
Because we have the habit of taking all these items to segment 2. Other than items affecting in segment 2, that is any item which does not appear in segment 2, or we don't have the habit of taking in segment 2, that goes in segment 3, such as prepaid, accrued, etc., etc.
Sir, but
interest part, debenture part, all this is a part of your segment 2. Always, always, always. If you take the segment 3, nothing wrong. At the end, answer will tally. But by habit, we have the habit of taking this to segment 2. Am I loud and clear?
Yes, sir.
But in our question, what did we change? We changed it to 16,000. So full 16,000 will be subtracted. Any problem? Interest paid on debenture is Kada, 10% was redeemed in the beginning of the financial year. 8% new debenture issued, no? Am I clear now?
Yes, sir.
Now, interest paid is how much? 16,000. So I'll minus 16,000. If interest paid is 10,000, 10,000 only I'll minus it. But in segment 2, what will I add? Full 16,000 I'll add back. So in segment 2, when you add back, what is paid, what is not paid, no need to differentiate. The entire finance cost I need to reverse. But when I come to financing activity, in that finance cost, how much is paid, not paid, you have to segregate. In segment 2, no need to segregate. But in financing activity, I have to segregate because I'm only concerned about the cash outflow of the financing activity. Dividend paid is how much? 50,000. Cash outflow, 50,000. So what is the net answer?
34,000.
34,000 rupees is the cash flow from financing activity. If you assume same 10,000 what is given in textbook, then the answer is 40,000 only. But in segment 2, there will be change. In segment 2, how much will you add? 16,000 only will add back. Now tell me what is the problem. So all the 3 activities are.
Yes, sir.
Now, when are we meeting? Tomorrow. Morning 10 a.m. So tomorrow my target is, yes, tomorrow class is there. Anama? No. Now I'm telling you, I'm very sure. இதுக்கு மேல ஆன்சர் இருக்க முடியுமா? Now, tomorrow 10 to 2 when we meet, sorry, 10 to 2, 10 to 12. So I'm planning to solve 2 to 3 questions of ICA module. 2 to 3 questions we'll target for tomorrow and finish it off. Any doubts? Any difficulties? My humble request to all of you, this PDF, what has been given to you, or if you have the textbook, from that, please practice more questions based on the investing and financing activity. Please practice it. In this textbook, the financing activity, the assumption for the assumption for the issue of shares, debentures, redemption is all at the end of the year. Do that, nothing wrong. Because in ICA module also, sometimes the issue of shares and the redemption of debentures will happen at the end of the year when the question specifically says. So everything we should know. Right? So even if this question is assuming the end of the year, please assume that and do it. Because for practice purpose, you need this. Am I loud and clear? Practice this before tomorrow. How much of questions you can practice? Come for tomorrow's session because tomorrow's question is going to be a little bit challenging. Because we are doing all the activities put together. And that too directly from the ICA module. Correct? So please come with a good amount of revision, especially the asset ledger which we created today. That is very, very important. So whatever ledger I created at the end, the summary of that I'll put in the notes. Is that okay? And which will affect what place, that also I'll put it. So for revision purpose, it becomes easy. Is this okay? Okay. Chalo people, that's all from my side. I'll see you tomorrow, 10 a.m. sharp. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you.